And in 1993-94, the leadership had changed the responsibility and organization. So the change in branding, change in finance has increased their gains and stabilized their income and so forth and so on. So this way, the IBM has achieved a great success in restructuring. Then when we talk about the restructuring, it is not always the change in assets. It is something more than the change in assets, where we were talking about how the things are made, how the things are changed. So, as discussed, today we'll discuss the turnaround strategy for Tata Motors. And after Tata Motors, we'll talk about the economic value statement. So, let me share the screen. So, the history of Tata Motors is its first Indian owned car, and before 1930s, it has started its journey in automobile sector. The 1998, it first initiated its indigenous car, and since then, it has shifted the gear and moved from its the traditional products to the new horizon, exploring the passenger cars. The move of this exploring the passenger cars was a great movement because till that the exploring this market was dominated by typically Maruti and Fiat. Maruti was having association with Suzuki and they are extending and using this profile for larger. The total passenger vehicles was around 4 millions and domestic sale was 3.3 millions, where the exports was 0.7 millions. So considering this, there was a lot of potentials available in passenger vehicle. Lot of opportunities were also available, and these opportunities, the exploring and utilizing for their benefit, it was the crucial aim of Tata Motors. So their keen interest is to see that the vehicles or the modes they are available before 1930s, the commercial vehicles, heavy commercial vehicles, trucks and buses, these things were done by the Tata. But the competition and expanding the horizon, understanding the new avenues, they shifted to passenger vehicle. The domestic contribution by the passenger vehicles was 6.75%, and that too of export is 2.14%. So if you consider this, there is a lot of potential in passenger car vehicles. So in 1998, the Tata has initiated its chance and they have started the journey in the domain of passenger cars. Let's talk about the Ori of company. The Tata Motors has started its journey by J.R.D. Tata in 1945. It has more than 79,000 employees and the total 128 countries. Now, currently the chairman is not Chandrasekharan. It is Subramaniam, and now no more is a chairman. There is a process of election, so this data is old. Then we have something called as Mr. Guntun Butsex. He is the chief executive officer. So this is an history. The company start manufacturing locomotives and engineering products in 1945. In 1948, they roll out a steamroller in collaboration with Marshall and Sons in UK. In 1954, they first roll out the commercial vehicle, that is their 312 truck. In 1964, they roll out from Jamshedpur the 1210 series vehicles. So initial collaboration in US companies, the Tata Motors has started their designs. Earlier, this Tata Motors was known as Tata Engineering and Locomotive Company because they were into engineering and locomotives before starting the passenger cars. They were very keen and enthusiastic about the iron and mining, but they understand the lot of potentials in other horizons, and they focus on something called as automobile sector. In early days, they focus on heavy commercial vehicles with collaboration like Marshall and Sons and others, where they roll out the trucks and buses and steamrollers as their output. In 1969, they began to start the buses, where they 1975 the Tata 1210 is a best model which they are selling. Now, even we see today the dumpers, the heavy mining vehicles, they are nothing but Tata 1210. So 1975, the legacy is still continued in their operations. In 1983, they explore the domain towards heavy commercial vehicles. In 1991, they officially launched first indigenous car called as Tata Sierra. So the first car launch was Tata Sierra. This Tata Sierra is recently renowned and refurnished in 2026. So journey of Sierra started 1991, continued till 2026. So if you calculate the years, it is more than 35 to 36 years the revamp has happened. In 1994, they launched the multi-utility vehicle, famously known as Sumo, and this vehicle has given them a grand success. They launched the multiple edition of Sumo, and it was very famous among the transporters and communals because it was heavy, and that was the first time when the Tata has given 2.8-liter engine, which used to come in Mercedes. So the engine was powerful, chassis and body was good. The vehicle was very popular in rural areas because of its robust design and strength. It was being appreciated and recognized. In 1998, they launched their first SUV called Safari, and then they followed the various versions of Safari. So, if we talk about the product portfolio, this is a complete family cycle of Tata cars. But actual the growth of Tata happens after the emergence of something called Indica. Before the Indica, whatever the products, they are in collaboration with foreign players. And after emergence of Indica, the indigenous tailor-made solutions which the Indian buyers are interested has been shifted. The focus was made to localize the things, and the market share was grabbed due to Indica by 16.7%, and they beat Mahindra, they beat Hyundai, and they beat other people in passenger car by sale of Indica. So Indica was a great success, making them a dream runner. They went in collaboration with Fiat. They went in collaboration with Dui. The company no more exists. They take over the many Korean companies and brought in the ideas in Indica. So the first generation they started 1998 to continue 2018 Indica, which later converted into Indigo, Indigo Marina, Indigo CS, and Indigo XC. In second generation, these cars were known as Indica Vista, Volt, Zest, and Indigo Manza. And now in third generation, we see the vehicles like Tiago, Tigor, and Nexo. So this is a legacy carried out by the Tata vehicles. So this is all about history and ownerships of Tata Motors. So if you see, they enjoyed the benefits from 6 to 11. 12 there has a stagnant profits. So legacy has a growth. Legacy has a growth and increasing prices, sorry, increasing sales. They have suffered in two regions because of the new product launch. And after a certain period, they have witnessed there is a tremendous shortfall which continued and their sale was stabilized after a certain period. So if you can see, this period was one of the reasons why Tata is required turn around strategy. I was having a less profitability around less productivity around 190, 180 vehicles. I grabbed it to 223. So it was launch boom, which I able to do it. After the launch boom, it is witnessed that it reached to the 333. So almost double. But the shortfall happens in one financial year because the introduction of the competition and lack of more innovations. And this way, the Tata has faced the change in its financial outcomes and number of vehicles, and then they decided to go with the turnaround strategy. So what happens? What is their turnaround deal? If you can see, Maruti Suzuki was having 423, 689. Just want to consider first numbers. So they were having 423, 663, and if we calculate the change in their proportions, the market share was 49% and earlier it was 47. So they have gained the 2% market share. Hyundai, which has 17.8 and 17.8, so they are continuing at par. There is no change. Whereas Tata Motors was having 5.3%, it has gained to 8%. So it was 2.7% gain what Tata has achieved during this percent. The Mahindra and Mahindra, they has reduced from 7.1 to 5.7. So almost minus 1.47 growth has been seen in, sorry, the loss has been seen in Mahindra. The Kia Motors, they increased their market share. So if I calculate the gain, it is 2.4% approximately. So even the new Kia Motors has achieved the success. Mahindra and Mahindra fails. Hyundai has no change, but Tata has significant growth. So average discounts Tata started giving 24,000 to 9,000 and average price has gone by 6,000. So one, the discounts and second, the price had made the sale of Tata Motors. They were covering the growth and it was not the real figures. Because if you see the change, the 244 is 162 and even the percentage is same. Why? Because the price has gone. The 68,000 vehicles are changed to 70,000. So even the 2,000 vehicles are increased. The change is hardly of 2.7%. But if you see the Kia, they shifted from 13,000 to 46. They changed it to 0.4. So by increase in price and giving discounts, the Tata Motors made their gain, but financially they were weak. They are not able to achieve that dream of leading the passenger vehicle. So this was their product portfolios and the competitors. If you can see, the most Indian market contributions they are made in SUV and hatchback. They lack in premium hatchback, they lack in midsize SUV and complex sedan, where the percentage of competition is very less. They hardly have something to offer here, but majority they are on compact hatchback, compact SUV, and so Harrier and Tigor were there, but the competition was great and the market share was declined. But comparatively, the Nexon was a front leader to help them to stand in the competition. So Nexon and Tiago was their major market contributors. So the management on Jan 17 has decided to revamp their strategy, restructure about change, and ensure the product decline is again rebound. When we talk about the product life cycle, we always take an example. The first research, growth, stagnation, and then the shortfall. If the company pay attention at this particular point, then the company should extend the product life cycle by innovation, by new products and something. So the cycle from phase one, phase two, phase three need to be extension as new cycle A, B, C, D, and so on. So this extension, this feasibility, this possibility is only and only possible if the product extension. So from 2017 to 2020, the Tata has discontinued their nine cars and restructured their product portfolio. They has shifted focus from brand ambassador toward the promotion of their own product as brand. So the instead of buying Nexon, the people are buying Tata Nexon. Even in IPL, they are shown their new cars as brand ambassadors. So indirectly, the Tata has changed the strategy about product positioning, changed the strategy about product portfolio and profitability, and they paid attention to establish the product as best brand ambassador. When the Indica was launched, it was so famous that most of the cabs at that time, India was in boom for the BPO. So for each BPO, the fleet was Indigo. And soon the Indigo has got a tag of taxi. So people for the family, they ignored the Indigo or Indica and they shifted to the other place. The new government laws has allowed the foreign players to enter the market with innovative ideas, where Tata has failed. Tata has the advantage that they concentrate on safety levels and meeting with the customer demands about build quality and strength. But talking about the strength only, they are lost in operational efficiency of their service centers, and they were having the luxury brands like JLR and many others, but they are not able to capitalize on these strong bonds. They still has a taxi sharing business much more. So their products are instead of class appeal, They extend as mass appeals, and the stamp of premium vehicles was not archived by them. So they still follow the pattern where their products are tagged as a mass vehicles. So if we talk about the segmentation, then the relative market share was dominated by entry level and compact. In mid-size, there are only two options, and in premium, they have still questioned no product is available. And this was their challenge to introduce something new here because the market is capitalized. If you see the compact sedan, they have only Tigor, and that to be having market share of 6.7. So the compact market, they got a product portfolio. Then mid-size SUV, they have only two products available. They discontinued nine products. So compared to this, the company is decided to explore their market growth rate and attempt and untapped market to go with. So what is the solution to this case? Tata Motors, as largest Indian automobile, they decided to turn around strategy 2.0. They decided to double the sale and market presence. They want the new generation impact designs, including safety and the features. They call these new designs as Anpam Vita, where need of localization and appeal of globalization is combined. So Tata has started focusing on strength, design, and the safety of the vehicles. And this third generation, they are concentrating on growth and hazards. So the Tata Motors, they decided that they have safety, they are has legal compliances, and they have all others. But they also consider that the extending a product portfolios by different domains. So they now launched the EV, they launched with the CNG, and they have first time launched the diesel cars, which don't require urea for their maintenance. So extending product portfolio, increasing the features, and concentrating on selected rounds is achieved. But what they are still fighting is this segment. So this segment is still unanswered by Tata. The Tata Avenue is being understood as answer to this. So by end of 27, we are expecting Tata will come something in premium market, and the dominance of compact is also being extended here because premium market and entry level compact sedan, these are the two challenges still unanswered and expected by entry of the different vehicles they will go with. So this restructuring is all about from only a commercial vehicle producers to the passenger car and then positioning themselves in one of the market leader by understanding the mentality of customers, by making their products as the brand ambassadors, and simply turn around the strategy of cash products. The Tata Nano was their great hit, but they discontinued, continuing the cash blocks what they have. Hexa was their great hit, but again the product features and outline was less. So considering all this, they discontinued these products. So product portfolio, the dimension of products, service norms, and establishing as mass products and classifying some product as quality is the biggest challenge Tata has still unanswered. And this is a partial restructuring what we face. There is one more case study about Tata that is Nano. When the Tata has a dream about Nano, they started the innovations in each domain, engine to design to tires and so on. I'll share the link on WhatsApp group. You can just see on YouTube. That was a case study of seven great wonders, the great engineers they are done. For each products, they are so innovative that they maintain the quality and they maintain the low price. This low price returns has created and benefit to Tata Motors, and that Nano was a hit, and still the you see many Nanos are there. There was a limitation and criticism on Nano about the sound, the shape, but still it is many people who are having favorite Nano as their vehicle because it was affordable, convenient, and very easy to operate. This is all about the history of Tata Motors. Now let's move to our new chapter and the end part of our first session, first unit, sorry, something called as economic value added statement. The economic value added statement is concentrate on the amount of profits or value which I am adding to the products. In economic value statement, my highlights were about how much money I make or I create from the source. I try to understand the gains or outcomes which I have generated. In short, economic value added is that matrix where not only productivity or profit, but what actual intrinsic value additions or the profitability generated is understood. So please read the slide. So economic value added is an paradigm shift how the performance is evaluated on global level. The working capital analysis, operation cycle analysis, the ratio analysis has shifted towards caramel, ECG, Harassment score, and much more formulations, which has converted the measures like that score, dew point analysis, and EVA. The dew point analysis is analysis of your working capital in a different manner, but EVA has created its greater impact by understanding the economics and value added to my portfolio. Simply, if I earn 10 rupees, it is very high that I earn something. But what is the cost I contributed for earning these 10 rupees is need to be understood. Whether these 10 rupees are sustainable, whether these 10 rupees has long-term propositions, whether these 10 rupees I'm going to earn future. For example, for earning 10 rupees, I spend 10 hours. My competitor has earned 10 rupees, but it has spent 3 hours. So actually, I not added the value. I just done the donkey work for earning the profits. So how much contribution of efforts, how much contribution of energy, how much contribution of productivity I'm doing or I'm using, that will decide whether I added value or I just been contributed towards the profit in numbers. For example, I used two people and done the production of 80 kilo. The competitor used three people and done the production of 150. So for him, the marginal utility for each input is 50, whereas for me, the marginal utility of each input is hardly 40. So the productivity what he has achieved is more than what I'm doing. He has more in numbers, more in output, but I have less product and less income. So economic value added is a judgmental analysis traditional method where we find out what are the decisions, what are the reasons, which turns into the matter where the value addition is not being proposal toward the output or productivity. In simple terms, what I achieved, how I achieved, and when I achieved, I need to compare about the cost. If I do all these things cost effectively, then it is being recognized as the best thing which I done. If this involves the heavy finance, heavy commercials, or heavy application of funds, then it is very serious and I need to count on the overchecking of all this. Now, let's understand the EVA in more better. Economic value added is a financial metric which goes beyond the profit. It talks about the opportunity cost of capital. It talks about the company's investment or creating shareholder value. And it talks about how the economic performance of an organization will making an influence over the financial growth or the vision of company in future. Why it is so important? Because this is a hidden method which talks about the shareholder value. It promotes long-term thinking rather than short-terms, and it is a tool where the output or productivity is counted more rather than counting the profit percentage and just counting the numbers. So even though my productivity is 100, my output is 100, but the question is whether this output is so eco-friendly and so questionable because the profit which I generate is mere outcome of quantitative numbers, but the cost aligned, the quality aligned, and the internal value is a challenge. Now, one serious question: what is most important for shareholders? There are two terms. One is one is called profit. The second thing is something known as growth of company. Third, we have something called as now we are done with the profits. We are seen with the growth of company, and now we talk about integration of company. Now let me explain these 3 points. The profit talks about I earn 10 rupees, I give the shareholder 10 rupees. So they are happy. Integration talks about use the profit to expand the company's business for forward or backward integration. That means if I have money, go and invest in source of raw material or go and invest in further processing of my final products or use the money instead of giving dividends. just return the money and expand your capital over there. So when we talk about investor, if he is very short sighted, he always focused on something called as profit. He thinks he has received the money. I invested 10 rupees, I got the 5 rupees. I'm happy. A smart investor, he always thinks instead of money, what I should get is a bonus share, or it can be right share, or it can be split. So, a investor, when he's focusing on his capitalization, he focus on these three terms. But when I want to understand the money which I invested is actually growing, I need to focus the integration. This integration is a forward or backward movement of company, increasing the foundation of a company. For example, if I am producing, suppose, an agriculture, sorry, if I'm trading with the agricultural crop called as grapes. So my company is selling grapes. If I want to follow integration, I have two opportunities. One, I can sell the juice, or I can have the processed grapes. So this is the forward integration where if I have money, I can go in backward and I will be smartly doing the grape farming. So if I have money, instead of giving as bonus shares, right shares, I will extend the product. Now, if I have grape juice, then I will go with preservatives, and raw juice, I will go with uh, alcoholic productions. I will extend it with non-alcoholic productions and so on. Whatever the processed grapes I have, I can further expand this to many other origins. So I just changing my matters. So there are two types of investors. One who want the profit, and second who want to maximize their wealth. So those who are want maximize their wealth, they prefer the growth, they prefer the integration, because instead of one company giving them 10 rupees, now I have multiple companies, and if this company has issue, these companies can give me the benefits. So this is a wealth maximization concept. So in wealth maximization, instead of short sight that what money I get, I will more focus on what money I can create in future. To better example, you have a two-wheeler and daily you earn 5 rupees. So you have profit of 2 rupees. You got two options. Use the profit and enjoy the luxury. But what you've done, you save the profits, take one more two-wheeler. Now your earnings start 10. Then you invest one more two-wheeler. So this way you increase the number of two-wheelers till the bottleneck when your utility is positive. So you're just creating the source of your income, source of your earnings, and this source of earnings is always a profitable way because this source will create an positive impact to your side. If one vehicle is breakdown, you got alternate. If two has breakdown, you got alternate. This way, when we do the wealth maximization, we are creating the alternate source of our income. We are creating the alternatives which we can utilize for our growth or productivity. And there, the economic value statement plays a crucial role. It talks about the hidden capital cost and compare this with profit metrics. It basically talks about the earnings, the profitability, and the gains, what the investor has achieved. For them, the profit is not only potential, but the earning per share is also being compared, and whatever the cost involved, they are matched, they are analyzed to understand the growth happen in the company. So when we talk about the advantages, it focus mostly on retaining the profits. His target is understanding the hidden values and exploring the purpose, the action, and the cost of profits. So EVA is a tool to analyze the wealth creation for shareholders. What is the formula for EVA? The formula is net operating profit after tax minus invested capital into weighted average cost of capital. Anyone remember the formula for WACC? I'll just wait few seconds. If anyone remember, please type in chat box. Okay. I don't think many are interested to answer these questions. The weighted average cost of capital, where we have something called as debt, we got equity, we got preference shares, and used to write, for example, I give an example of 1.5 plus 2.3 plus 3 by 8. So if I want to solve this equation, what I do, I will multiply 5 into 3 into 8. So it is 24 into 5. So it becomes 120. 24 because I multiply this 2 for the 1. Then for 2, it is 40. So 24 plus 40. For 3, it is 5 plus 3, 15. And this is nothing but the weighted average cost of capital formula. What I do, this is suppose equity, this is preference shares, and this is my debt or debentures. I give them some weight and I apply the weight to calculate WACC. The net operating profit after tax is nothing but, in our accounting terms, what we call as net profit. So, whatever the earnings available after interest, depreciation, and tax is called net operating profit after tax. So, the profit which is available to distribute for shareholders after giving all the liabilities is called net operating. Then invested capital is the sum or pool of money which consists of all the things, that is equity plus debt plus lease. So even though my own capital or even it is my borrowed capital, whatever the form, it is called my invested capital. So net operating profit is a profit after tax, after removing the accounting discontinuations. So it is net profit, whereas invested capital means the money which we have in capital block other than the reserves. And WSAC we already done in last semester. Again, I'll revise in this, but will not go in more deeper sense. So when we calculate the net operating profit after tax, when we talking about net operating profits, we are always dealing the gains, advantage, and the profit available after paying everything. The invested capital, when I compare with the profits, I can just talk about how much gain I'm having. And the weighted cost of capital, I'm using the statement so that the percentage of their contribution is evaluated and understood in all these three terms. So these are the three major components of economic valued statement. Please go through the slide. I'll wait for a few seconds. Let's continue. What are the steps of economic value statement? I'm going to illustrate this as an example, but initially we'll understand the theory part, then the illustration. Now, it is suggested that when we are calculating EVA on virtual mode, I'm not able to take much numericals. So, if possible and interested, we'll arrange offline session on Saturday. Those who are interested, they can come and they can learn the offline EVA because this concept need a practice. And if I talk about your syllabus, as per the syllabus is concerned, the syllabus indicates that for your syllabus, we have to solve the numericals about economic value statement. So I'm just sharing the syllabus. So if you scroll down, they are specifically mentioned the calculation of EVA is there. So calculation of EVA is a crucial part. And if I just share you the question papers of advanced financial management, So let me share the screen for the same. In case of advanced financial management, we got the numericals where they want us to prepare the cash flow, and option to cash flow is again a cash flow. So cash flow is compulsory. The second numerical, they talk about earning per share. The third, they talk about the net income approach, so theories of dividend, and so on. So till date, if I just check the other papers that last 2 years, you can just see the numericals on earning per share, sorry, economic value statement is not actually being earned. What they are doing in question number two or in question number one, they are asking the things about economic value. So comparatively, even the syllabus is mentioning the EVA, the numericals are 99% asked on cash flow. So while preparing for examination, we'll focus mostly on cash flow. We'll prepare for this, but we'll more focused on cash flow. So we'll do the practice of this, but a limited approach will be applied. So the first thing while preparing the cash flow is adjust your net profit. Whatever the things available, non-productive, non-utilizable, we have to take care this profit is adjusted with dividend, interest, depreciation, and whatever the government tax liabilities like tax or any other things. So we have to ensure that everything is paid. Then after this, we have to analyze the capital block. What is the inclusive part? Like how much is equity capital, how much is the preference shares, and how much is their liability. The third step, we will calculate the weighted average cost of capital, comparing the source and available funds. And after that, we'll apply the formula and calculate EVA. So it's look very simple. My dear students, if you practice the finance, it is so simple. But if you ignore and take it as a casual approach, you will never go on deal with numbers. Then it will become a difficult for your side for calculation of EV. So we already discussed this. I'll just wait for a few seconds. You just read the slide. We'll move ahead. Now, this is just giving the weightage or advantage why EVA is so grateful. So let's understand how the EVA is best technique. We have data that net operating profit is 1 lakh, capital is 1 crore, and weighted average cost of capital is 12%. So if I take a traditional method, I just find out on 1 crores, 1 lakh is received. So my return is 10%. So according to this, only 10% is gain after investing 1 crore. But if I do actual EV analysis, then 1 lakhs minus 1 crores 12%, that is 1 lakhs minus 1 lakh 20,000. Actually, I'm not getting anything, but I'm losing 20,000. because the capital block and the advantage each indicates. So here you can see in real world, we were saying that 10% money I have received, but the time value of money and the cost of investment is ignored. And when I calculate EVA, actually I made a loss. And that's why EVA is a real example to enlarge and understand whether actually I'm making profits or I'm shrinking down. And that's why EVA is preferred choice of investors to analyze the profitability. Now it's almost 8 o'clock. So we further have to discuss the advantage. Then we'll talk about the drawbacks and limitations, challenges, practice, and application. Then we'll discuss how to calculate the EVA and how to use in practical sense. So that's all for today. Please log out now. And if any doubt, put it down on your paper. We'll discuss in next meeting. We'll also start working how to calculate EVA using Excel in next meeting. So that's all for today's session of AFM. Join the next session of finance and we'll meet for the my session in the evening 6 p.m. for financial reporting. Till then, good day, enjoy your whole day. Now you can log out.